Hello, traders. FX Pip Collector here. Today is Tuesday, March 11th, and this is my morning video where we like to take a look at the US dollar pairs, including gold, and we also like to take a look at a couple of the JPY pairs. If you haven't done so already, definitely do join my free Discord trading community, link down here in the corner. Also, don't forget to check out my website, fxpipcollector.com, if you'd like to get access to all the benefits listed below and more. So, anyways, I always like to start off by looking at the news calendar. We have a lot of news this week, but most of it actually starts tomorrow. Today, the only real news that we have is the JOLTS job openings, which definitely could be a market mover. So pay attention to your charts. Keep in mind that there is only 4 hours difference between the UK and the US right now. So instead of news coming out at 1:30, it usually, like it normally does, UK time, it's coming out at 2 or 2:30. So definitely keep that in mind over the next couple weeks until the UK and Europe changes their clocks also. So, anyways, the US dollar index, boys, just keeps on pushing down. Now, I am definitely very bearish on the dollar index. I mean, I still think very likely this is going to keep pushing down on the weekly time frame. But that doesn't mean there's not going to be some rallies on shorter time frames, some pretty decent pullbacks. We've been looking at this pattern for a few days now, thinking that it is due for a pullback, but it definitely hasn't pulled back yet, and we are well closing below the 50%, there is a chance that this just keeps on pushing down to the 61% Fibonacci retracement and perhaps maybe even beyond. Which, if that's true, then that would keep the euro, the pound, the Aussie, the Kiwi up, and probably the CAD and the Swiss down. So keep in mind there is no proof whatsoever that this trend has started any significant pullback yet. So keep that in mind when you move on to the euro dollar. I've been saying for days now that the euro dollar looks like it should pull back, but I've seen these type of situations so many times where it looks like we should have a pullback, but because it's such a strong turn on the very high time phase, what actually ends up happening is it just keeps on trending up. My next area of resistance is the 78% Fibonacci retracement right around the 1.1 area. So definitely still recommending longs in an uptrend. Going down to the 1 hour time frame, I mean, I definitely wouldn't be recommending longs. I definitely wouldn't be trying to go long now. Yesterday, I was talking about how if this makes a higher low, then it would probably be a really nice opportunity. Perhaps even a wave two, wave one, wave two, and perhaps starting a wave three. So I would definitely not be trying to go short. 80 some odd percent of traders are trying to go short right now, and they are losing. So don't be that guy. Be the guy who just enjoys all the pullback entries and just goes long here, goes long there, goes long here, goes long here, goes long there, goes long there, goes long there. Your life is going to be a lot more simple if you just trading with the higher time frame trends. So definitely looking for longs on pullbacks. Now, the pound is not quite as strong as the euro. The pound has not been able to really break out of the 61%. So, I mean, maybe it will pull back more. Maybe it will break out and just keep on going. Looking at the dollar index, there's no reason to think that this may not break out and actually just keep on trending up. So, keep in mind that the trend is up. Going down to the 1 hour time frame. Yesterday, when I had my Fibonacci retracement on here, I said that this could end up being some sort of a weird flat, maybe like one down, one up, one down for like an expanding ABC or a regular ABC correction. Definitely looks like that's what happened, and it looks like we're back into the uptrend, to be honest with you. I wouldn't be surprised if it does break out. I would not be surprised if it does take out the previous high and make a run for the next Fibonacci level on the daily time frame. So I'm also very bullish on this. I definitely am recommending longs. I wouldn't be trying to go long now, but if you've been keeping up with my videos, perhaps you are holding on to a long because I was talking about this move up yesterday in my morning video. So definitely recommending longs and definitely looking for more longs. Moving on to the Aussie dollar. The Aussie dollar is quite a bit different than the other dollar pairs, but I definitely am still looking at this as upturn to the upside on the higher time frames. I think it's a wave one, wave two. I still think there's a very good likelihood that this is going to, just like the other dollar pairs, continue its uptrend. So I'm definitely very bullish on this also. If you go down to the 4 hour time frame, it kind of seems to me like we might have a really very clear pattern here. We just need to see a break and hold above structure to confirm it. Looks like a wave A, looks like a wave B, looks like a wave C. Kind of turned right in between two fib levels. That's why I want to see a break of structure because it could turn down, hit the 61% and then turn back up. But I'm definitely very bullish. If it breaks and holds above structure, then I definitely would be very bullish and try to get long every single pullback I see, potentially for the continuation of this uptrend. So definitely recommending longs on that. I definitely would want to see a break and hold above structure and then a pullback in order to go long. But that's definitely what I'm looking for on that one. If you move on, then the Kiwi dollar is exactly the same strategy, exactly the same things. That's why I don't really cover it. Exactly the same as the Aussie dollar. US dollar CAD, on the other hand, is quite a bit different also. I think this is an A, B, C, hopefully a wave 2. I think it's an ABC of 2, and I think eventually it's going to start this huge downtrend that I've been bragging about for a very long time, which you have to go all the way up to like the weekly, monthly time frame to see where I think this is going to go, which I think is going to go someplace around the 1.197 area and maybe even below. So, but for now, I think we're still in a correction, so I'd be keeping an eye out for that. Now, going down to the 1 hour time frame, this move up is kind of more like a trend. It's kind of a five-way move. So I have my Fibonacci retracement on here because if we do get a Fib bounce and an engulfing move up, it might go up more. But it kind of seems like this should be like a wave A here. It kind of seems like this should be a wave B. It seems to me like it potentially should keep going down for a wave C to make that A, B, C of B. So I think this is a B of wave 2, like I showed on the daily time frame. Way up here is the A of 2, B of 2, and then eventually it's going to turn back up for a C of 2, just like what I drew out on the daily time frame. So moving on to the US dollar Swiss. US dollar Swiss has been a very weak pair to the downside, and I definitely think that we're either in a wave 1 or wave A. I think it's a wave 1 personally. Most wave 1s, wave A's do end around the previous structure, so it might actually end up pushing down a little bit more, taking out these lows before we see a big significant pullback. So keep an eye out for more sorts. Going down to the 1 hour time frame, we are definitely kind of consolidating around. So I do have my Fibonacci retracement on here from the top to the bottom because if it does start to make a push up, I definitely would still be looking for sorts. I would definitely still be looking to go short at the end of any three-way pullbacks I see. Now, even though I sometimes draw out these ABC corrections, I have no idea whether it's going to make an ABC pullback like this. It could easily just go up a little bit and just keep on going down. All I know is that I personally am looking for sorts at the end of every single 1, 2, 3 way pullback I see for the continuation of the downtrend. So if you see three waves up, if you see impulse to the downside, I definitely would take it as a sort for the continuation of the downtrend. And moving on to gold. Gold seems like it's playing out pretty much exactly as we've been talking about lately. I think this first move down is an A. I think this is an A, B, C, a B. I think it's going to go up, take out these highs, and then I think it's going to turn down for the C. And that's going to make an a B, and a C of wave 4 to match this wave 1, wave 2, wave 3, wave 4, and then eventually back up to probably about $3,000 an ounce for wave 5. So keep that in mind because that's going to tell you what to do on the shorter time frames. Going down to the 1 hour time frame, I was saying yesterday that if we get a nice, double bottom bounce at a Fibonacci level, you can watch my video from yesterday. If we get a bounce from one of these two levels, I said that it's probably actually going to go up and make a wave C. I think this is an A. I think it ended up making like a weird WXY type thing, or maybe a regular flat, like three waves down, three waves up, and potentially five waves down. Either way, it's definitely a three-way pullback for the wave B. Either way, I think we are back into an uptrend for wave C. I would keep an eye out on these tops right here. If it goes up and takes the tops and then turns back down, it might be the end of a wave B, and it might be the continuation down for the wave C of wave 4, just like what I drew out on the daily time frame. So moving on to the yen pairs, dollar yen, I definitely consider more of a yen pair than a dollar pair. We are sitting at a pretty important Fibonacci level, but that doesn't mean that it has to pull back here. It potentially could blow right through this level if it wants to. Does seem like a really likely place for a pullback, but because the trend is down, because our last structure is way up here, I personally am definitely looking for sorts in a downtrend. So going down to the 1 hour time frame, if it does start to make a move to the upside, if it does go up and start breaking structure, the first thing I would do is start my Fibonacci retracement on the whole move down. It hasn't even broken structure yet, so there's really no point in throwing your fib on there. It potentially could just continue to make lower lows, lower highs, and just keep going down, and that's why I definitely wouldn't recommend trying to go long. If it does push up and then you throw your fib on there, I guess if you're trading the sort of time frames, you could try to get long for the wave C. But I personally would still be recommending shorts, even if it does break shorts into the upside, because the trend is your friend and the trend is definitely down on the higher time frames for sure. So moving on to the euro again. Looks like the euro again is going to push up and try to break the high. Like I've been saying, most wave A C's do take out the high of wave A, and this one definitely hasn't yet. So it probably is going to end up pushing up. It probably is going to end up breaking structure before it makes a bigger move to the downside. So I don't really think it's ready for the big shorting opportunity yet. I think it's going to go up and grab liquidity, take out the high of wave A, and then possibly turn to the downside. So keep that in mind, taking it down to the 1 hour time frame. If you had your Fibonacci retracement from here to here, hopefully you would have been able to recognize that it made 1, 2, 3 waves down to a fib level and then made an impulsive move up. Nice breaker structure. That's actually a very, very, very nice, clear example of an ABC correction. At this point, I think that it's very likely it is going to go up. It's probably a wave 1, probably wave 2, probably wave 3, ABC of 4, and I bet we're in a wave 5. I think it's going to go up, grab the liquidity from the daily time frame, and then it will probably turn down, ending a trend for a wave C, and potentially continuing the higher downtrend, the higher time frame downtrend that is. So moving on to the pound yen. Pound yen has really been struggling to go down also, and just like the other pairs, maybe this is going to end up pushing up and grabbing liquidity before it goes down. I'm not really too interested in going long. I would much prefer to just wait for the sorting opportunity because I do think that we have a lot of downside potential on all the yen pairs still. So even if it does make a push up, I think it's still going to be a better opportunity to go short for the continuation of the downtrend, unless you're trading the really short time frames, which I'm not. So going down to the 1 hour time frame, it does look like a little bit of a 1, 2, 3 wave pattern to the downside. You know, A, B, C down and nice engulfing up. So we'll see what happens. I mean, I got my Fibonacci retracement on here because if it does bounce from a fib level, turn to the downside with a big engulfing move, then possibly it will just keep on trending down. But at this point, it might actually just end up going up and maybe even taking out the previous highs before we get a big push down. So it's hard to say. I definitely am recommending shorts. I'm not looking for longs because the longs for me are unreliable because it could literally just go up a little bit and turn down, or it possibly could just go up all the way back up here and then turn down. It's really hard to say. But I do know that if it does turn down and if it does give me a short, then that's going to be a much more reliable trade, especially for a good risk to reward ratio. So that's why I'm still looking for shorts. Whether the short happens now or whether it happens later on in a couple of days is the question. I just know that when it does make an impulsive move down and a recognizable pullback, I will be ready to go short for the continuation of the downtrend. So don't forget to join my free Discord channel, which is linked down here in the corner. And as always, happy trading and good luck to everybody.